Good morning, everyone. I'm Martha Stokes. I'm a retired chartered market technician. I love to teach and I want to share some ideas with you so that you can help. This is a tutorial. I'm going to be talking about run gain potential and understanding the dynamics of fundamentals within the stock charts today. We have ADI. I have outlined this fundamental level support where dark pools were quietly starting to accumulate all along this area, which this indicator shows a steady, slow accumulation. Accumulation is the quantitative analysis of a stock and determining what price range the dark pool buy-side institutions are going to determine for their time weighted at price average uh, buying activity. They use time weighted at average price, not volume weighted at price. Why? Because time based on price can ping so that they slowly accumulate without disturbing the stock's price. And this is an imperative when they are in accumulation mode. They do a quantitative analysis of the company in a very complex formulas and determine what price range is best suited for their accumulation at that moment in time. And so the TWAP order will ping if the stock drops below their buy zone. I call it a buy zone, it is my term. And it stops pinging when it goes above their buy zone. So you can set parameters so that you can make a nice rectangle here and know that this is a buy zone and the buying is basically mostly in the middle of this range that's going on. So this is a buy zone. This is also a fundamental level based on a very severe, complex quantitative analysis that a formula does for the buy-side institutions. And there will be several. We can see that accumulation has been going on steadily. It's starting to decline a little bit here. So if the price goes beyond this level, the TWAP will stop pinging. If it falls below this level, which it hasn't yet much, then it will stop pinging. It will start pinging again and it will drive the price back up. So this is a buy zone. The buy zones have the professionals trigger to where they will nudge the price to create a run up. Now, the pros get in here, but they do not drive the price up. Small funds managers and retail investors and traders drive the price up. The pros merely ride the wave up, and when it gets to a certain level, they will start selling for profit. And this may cause a slight nudge down or a little up, but more of a nudge down because the pro traders have gotten out, so the big money is gone. Professional traders often swing 1 million to 5 million share lots. It's very common. So when we have this, we can also see that this was a swing trade run. The swing trade run starts at a certain level after the pros are in and ends when they get out. So you can calculate the run gain potential. How many points did the stock run? 200, 230 to 275 or 71, and then they got out. So that's a pretty strong momentum run. The next run up is here, and it started at about 275 and 275 and ended about 299. So it's a much shorter run. Then we see, and that's a negative for swing traders. If your run gain potential starts shrinking, it means that people, the retail investors, retail traders, and small funds managers are no longer buying and as they once were. Now we have this crazy thing that's happening right here. And it is a very dicey action that is going on. Should be a red line. But this angle of ascent is too steep to sustain. And there's buy, sell, sell, buy, sell, sell, buy, buy, sell, buy, sell, buy, sell. You cannot trade this stock at this time. The angle of ascent is too steep. And if we switched over to a weekly chart, we could see that it's way too steep. way, way too steep to sustain. Okay. So we're looking at this ADI and we're seeing this, and it reports tomorrow. And it's got this speculative run, a pre-earnings run going up. But it is at risk of having an HFT AI, which are making tons of mistakes, just enormous quantities of mistakes on reinterpreting retail news. And retail news is flooded with negativity right now, which causes people to be afraid. And so we have this angle of ascent that's unsustainable. This was severely up. So the run gain potential is nil for additional buying of this stock. It is going to be a problem. And we have buyers and sellers creating a havoc with a swing trader trying to buy into it and hold it long enough to make a profit. It just isn't there. So what we have is a situation where the fundamentals are still considered to be down here by the buy side institutions. They are no longer in this stock. They are no longer buying it. There's some pro traders trying to nudge this down, but there are more speculation from the retail side and the smaller funds managers still trying to drive it upward. But this is a very dicey action, and it's not worth even bothering with. And you should be prepared that there's the earnings tomorrow. This is not a good pattern. There's no run gain potential here. There's none. There was huge run gain potential here, and then it started shrinking. So it's called shrinking run gain potential. And that means it's not good for a swing trade. You can't swing trade this stock because it doesn't have any run gain potential. If you have a run gain potential and it gets longer and longer and longer as it's going up, there's more and more buyers. But at some point, the run gain potential will shrink. In this instance, it shrank really fast. We had one big run out of the buy zone, and then we had a correction, and we had a really small following one, and then all this dicey action. The smaller funds managers are divided, which is unusual. Usually all small funds managers are buying the same thing and selling the same thing. But right now, some small funds managers think the world is coming to an end, that the market is going to crash, and some think that there's going to go up and up and up. So they're in total divided by opinion and sentiment, and they're reacting to news, and the news is often negative. Or sometimes gurus are telling you, buy the stock, buy the stock, buy the stock. Well, it's not a good investment right now, and it's definitely not a stock to trade. This didn't provide enough run point potential down to really make a profit in your selling short. So this stock right now is not tradable. And it's important for you to understand that some stocks just aren't tradable at the moment, and you need to move on. There was a nice long buy zone, and it was tough to swing trade this because it was really a platform position trading entry signal. And the pros nudged it and it moved up, but then it started getting slackening because of the angle of ascent is just too steep and it's visible on the weekly chart. You need to use weekly charts as well as daily charts so that you can really see what's going on. Because if you don't see what's going on, you're going to be getting into a stock that has no run gain potential to the upside or the downside. This one is dicey at best. They may gap it down. They could, because there's not a lot of support here. So where's the support? The absolute support is down here in this fundamental zone. They could gap it down to here or gap it down to here. HFTs is what I'm talking about. And if the earnings has any negativity at all, HFT's AI is gapping things down this time. And it is making a huge amount of mistakes, like I mentioned last week. It makes a lot of mistakes. The HFT AI is primitive, and it is taking retail news and making the assumption that the retail news is accurate, when oftentimes it is exaggerated, overstated, misleading, manipulative, and so on and so forth. So you need to be aware of this so that you can trade wisely and not lose money. This is my tutorial for the day. I want you to trade wisely and be able to identify run gain potential when it's shrinking or expanding, because that will improve your trading dramatically if you just do that one thing. I'm Martha Stokes, and that's the topic for today.